going into tomorrow. Oscillator wants to support the bulls here. Ladies and gentlemen, Geeky here. Welcome to the daily update. Hope you guys had a good day trading. Today, market is up about 2.5%. There. On the S&P Nasdaq 3.3%, Semiconductor 2.3%, Dow 2%, Russell 2000, transport, banks, energy, biotech, healthcare, home builders, utilities, retail, emerging market, every single sector's up about 2 to 3% today. Bitcoin up, gold, silver miners are also dollar down, oil flat, treasury bond down. VIX is down about 3% there. Let's stick with S&P 500 ETF. Spider! 65-minute chart here. So this is where we close on Friday, and looks like we actually saw a significant gap up this morning, and with that buyers were able to bring the price back above the short term and the micro term right here. And with that, on the first hour we did see that thrust to the upside, but keep in mind my midterm moving average here been acting as a resistance the entire day. You can see on last Friday morning, that was the moment where this market did tank about 2 to 3% on Friday after tagging that midterm moving average. We'll sell the same that midterm moving average. You can see on that first hour, at least, buyers should be thankful that we didn't see a tankage like we saw on Friday. We held up here on the first hour, even after hitting that midterm moving average on the first hour, second hour, trying to bring it back up above that, but the entire day we were not able to get above that midterm moving average. We're just residing just underneath it. So as I zoom out a little bit, as you can see, that midterm moving average did act as strong resistance. See on the 5th of October, right there. Not able to get above the midterm moving average. Obviously, the midterm moving average is declining, telling us the sentiment is bearish in the midterm of things. Buyers got up, hit that a couple times. Market tanked for about 2 to 3 weeks straight. So it does carry some heavier weight here, right? That's what happened on Friday, and we're back at it today. So if buyers want to see any kind of light, not only do they need to bring the price above the midterm, but you can see the down gap right here. On Thursday, last Friday, you can see buyers filled about 20% of the down gap, but majority of that down gap still remaining open, and that's not a good sign. As long as this down gap remains, you want to continue to kind of look at this market as, bears can have their moment of attacks. Unless not only they have to get up, but buyers have to get above the midterm, but fill the entirety of that down gap there. Should there be any kind of decline going into tomorrow, you can see buyers need to hold that gap. Thankfully, though, for the bulls, that this gap remains open. So if they can maybe protect this gap at 363.97, right? We got the micro term here, short term here. They can somehow protect it. And maybe bulls can gather momentum, trying to at least get above the midterm and trying to retest that down gap area. Let's check out that oscillator. So that oscillator is actually seeing the cross today. We talked about the fact that bullish divergence appeared last Thursday, right? Lower lows on the price action, higher low on that oscillator. There's a bullish reversal signal. And then with the Friday action, we did see downturn, but looks like going into tomorrow, oscillator wants to support the bulls here with that cross. But again, that needs to be substantiated with the price action. There's a good chance if we do see some sort of jump start, at least in the first 2 hours tomorrow morning. And if we do see that oscillator continuing to the upside, there's a good chance the bulls can manage to get above for the first time in a long time midterm moving average and go after this down gap right here. I'm gonna come back for you. We'll reassess the situation. Enjoy your evening and go trading tomorrow.